Hello and welcome to Virtual Investor Conferences. My name is Eric May, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Giga Metals Corp. Please note, you can submit questions in the box to the left of the slides. You can also view the company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I am very pleased to welcome Mark Jarvis, CEO and Chairman of Giga Metals Corp, which trades on the OTCQX Best Market under the symbol GIGGF, and also on the TSX-V under the symbol GIGA. Welcome, Mark.
Well, thanks very much, Eric. And I'd just like to welcome everybody that's in attendance. Let's get started. So, we are one of the extremely large undeveloped nickel projects in the world. And there's, maybe two or three of them in Canada that are similar, although we don't think, we think our project is actually quite unique and quite different from the other large, low-grade, open-pittable sulfide nickel deposits in Canada. But they're all going to get developed. So let me just get going with that. This shows our camp, and it shows our airstrip. It shows the Turnagain River, and it just shows the terrain. It's rolling foothills terrain. This is excellent country for road building. It's excellent country for open pit mining. We have formed a joint venture with Mitsubishi Corp. We've got a joint venture company called Hard Creek Nickel. We own 85% of it, and Mitsubishi Corp owns 15%. Now, just to be clear, this is not the car company, although Mitsubishi Motors is part of the giant Mitsubishi Corp. It's a different division, but we're dealing with the commodities trading division of Mitsubishi Corp. They're like the largest commodities trader in Japan, and they've got a raw materials division within the trading division that actually participates in mines, and their modus operandi is to get involved at the development stage. And ultimately, they like to get the mine built. They like to help to put the partnership team together and the capital together. They like to end up with 20 to 25% of the operating mine, but they don't want to operate themselves. They simply want the offtake. And they've done this successfully time and time again. We recently put out a pre-feasibility study that models about 35,000 tons a year of nickel and 2,000 tons a year of cobalt. This is a giant project. Initial capital cost, $1.9 billion US, 30-year project life. But as I'll be showing you, we think that 30 years is just the start. We make a beautiful concentrate, very clean, 18% nickel, 1.1% cobalt. And we do it at, for competitive pricing. One of the beautiful things about this project is the simplicity of the flow sheet. It's crush it, grind it, float it. And that simplicity also means low technical risk. The less steps there are, the less things there are to go wrong. And this is all old tech, well understood. Now, this low strip ratio we've got is like unusually low. 0.4 to 1 is a very low strip ratio. That also makes this more efficient. You're moving less waste rock to dig up every ton of ore that you're actually putting through the mill. This will be a low carbon operation. In the PFS, we're 1.8 tons of CO2 per ton of nickel and concentrate. And that is amongst the lowest in the world already. But we've got a path forward through sequestration of CO2 in our tailings and other means. We think we can get this to be a carbon neutral mine, which would be quite remarkable. This concentrate that we make, we model that we're going to sell it to a smelter and it'll be processed into class 1 nickel. But it's a product that you could take multiple different processing routes with. And the most obvious one, aside from smelting, is a pressure oxidation circuit. It's a type of refinery where you can take our concentrate and convert it directly to either MHP or sulfate which are the chemical forms of nickel that the battery makers are looking for. We didn't model it that way because there's not a lot. There's a few refineries of that description. We think there's going to be a lot more built over the next few years. But until that market develops, we're just going to model the market that already exists. So here we are in north central British Columbia. Again, this is the Coast Range Mountains. This is the Golden Triangle west of us. But we're in the rain shadow of the Coast Range Mountains. So we've got just the right amount, actually, of precipitation. This mine has got a neutral water balance, which is a wonderful thing. We're located jointly. Our area here is claimed both by the Tahltan and the Cascadena as traditional territory. The Tahltan control the access. The Cascadena are downstream. The Turnagain River runs north and ultimately empties into the Arctic Ocean. And both nations, we've got good relationships with them. They're generally supportive of responsible mining development. And in fact, they're doing extremely well out of the mining business. So this PFS, this is our maiden reserve. And we've got a total of 950 million tons of reserves, which is what leads to the 30-year mine life. Those 950 million tons of reserves are a subset of our resources. So measured plus indicated, we've got 1.5 billion tons of resource and plus another 1.1 billion tons of inferred. So when we say that the 30 years is a start, that's part of what we mean. This is, I think once this is set up and operating, it's going to keep going for a long time. This will be a multi-generational mine. And then this shows the ultramafic intrusive, which hosts the nickel deposit. And down here in the Horse Trail Northwest in the Duffy Zone, this is the area that we're modeling mining. And most of this is unexplored. We think even with the 1.5 billion tons measured and indicated resource and the other billion tons inferred, we think that drills off about 20% volumetrically of what we think is highly prospective here. So again, once you get this thing up and running, it's going to be going for a long time. And this just shows our processing flow sheet. Very, very simple. And again, the concentrate is beautiful, very low in impurities such as arsenic, mercury, cadmium. These are all things that can cause problems in further downstream processing. But this is truly a premium product. And in fact, this isn't reflected in our PFS, but we think that the smelters will pay us more for this because, the average grade of nickel out there is sort of 8 to 12%, and there's even 4% nickel cons that get sold with lots of impurities in them. So if you're a smelter, you can buy sort of cheapo concentrate and then blend away the problems with it by mixing it with the high value concentrate like this. And this shows our production over the 30-year mine life. The green line is nickel, the blue line is cobalt. And this is a map, and I'm sure it's out of date already, but just all of the gigafactories that have been announced and that are being planned, and some of them are being built in North America. And in North America alone, we need another 250 to 450,000 tons per year of nickel just to feed these gigafactories. And people are getting worried about the long-term supply of nickel. Now the difference 250 to 450, it'll depend on, there's two main battery types, one of which is LFP, which is a lithium iron phosphate. There's no nickel in that battery. It is a heavier, less energy dense battery. It's a good technology, but it's more for sort of commuter cars, taxis, that sort of thing. The function of nickel in the battery cathode is energy density. Nothing has the energy density of nickel. And so if you want more range for your electric vehicle, you need more nickel as a percentage in your cathode chemistry. And that's what the battery companies have been spending huge money on in the last few years is really upping that level of nickel. Excuse me for a sec. So the Inflation Reduction Act is good news for Canada. We are a free trade partner of the United States, and so if your materials are sourced from Canada, you can get a refund when you buy that electric vehicle. And then the Canadian government is also very, very interested in Canada becoming an important part of the battery supply chain for the United States. We've got the resources here, and we're friends. So, what it adds up to, one of the implications of that is, as a miner, is that, when we go through the permitting process, it's very helpful if the government is kind of on side with it. And the governments, both in the US and in Canada, are very on side with developing critical minerals deposits, such as this one. Yeah, it's a big addition to what was already a strong and growing demand for electric vehicles. It's going to be very interesting to see how it plays out over the next 5 years or so. And this is the global demand for nickel in batteries. Nickel has gone, from 3%, or batteries have gone from 3% of nickel use to about 16% just recently, and that's in about 5 years. The growth rate is phenomenal, and you need a lot of large new nickel projects, and by large I mean the size of Turnagain, which can produce 35,000 tons a year of nickel. You need 120 of those worldwide. They just don't exist. So even though you may have noticed that the price of nickel has dropped by almost 50% in the last 6 months, we see nickel as in a structural bull market caused by this new demand driver, electric vehicles and batteries. And temporarily, right now, the Chinese have overbuilt nickel production in Indonesia, and there is excess supply right now. But where's the price going to be 5 years from now? The people that we're talking to about building this mine, that's what they care about. Where's the price going to be 5 years, 10 years, 15 years from now? And the car makers are frankly going, can I even get my hands on nickel 10 years from now? So there's some very interesting discussions going on that way. Another note about the current price of nickel, it's trading around $7.50 a pound, $7.30 a pound, something like that. At that price, 1/2 of world nickel producers are losing money with every pound of nickel they produce. So, it's just an indication that I can't tell you timing, but certainly if half the producers are losing money, you are at or near a low. And that's always a good thing to know for an investor. Now, this is an interesting chart. This is nickel prices over the last 40 years. And in the black line, the nickel prices have been adjusted to $20-23. Very interesting the way nickel trades. And every once in a while, every 20 years or so, you get a major spike for 2 or 3 years. And if you're producing nickel when one of these spikes happens, boy, you make a lot of money. And, I think it's building up for another one. And I also think that this time, when nickel does take off again, when it eventually comes down again, it won't come down as low because you've got, again, this steady new source of demand for batteries just working away constantly. Now, Indonesia has come from almost nowhere to about half of world production of nickel. And so I've just got this comparison here. We're looking at building an open pit mine. It's a big hole in the ground, but it's a limited surface disturbance relative to the amount of rock that's being moved. In Indonesia, these laterite deposits, these oxide deposits, they're strip mines. Basically, you've got nickel and clay and dirt, and it might be 20 or 30 feet thick, and it goes on for mile after mile after mile. And in Indonesia, the amount of deforestation associated with nickel, this is becoming a worldwide story. There is a lot of environmental degradation happening in Indonesia. And in fact, there's an election going on right now in Indonesia, and one of the subjects is, the unfettered rise of nickel production associated with environmental destruction. So they mow down tropical rainforests, they destroy nobody knows how many species. This stuff gets very aggressively processed using high pressure, high temperature acid leach. And in many cases, they're just dumping their tailings in the ocean. And this is an area of very valuable coral. It's known as the Coral Triangle. So these, and also the carbon intensity of Indonesian nickel gets as high as 80 to 1. 80 tons of CO2 produced for every 1 ton of nickel. It gets as low as about 30 to 1. But it's generally very high carbon footprint in addition to the environmental destruction. So the reason I'm showing you this is to tell you that there's a lot of OEMs out there looking for long-term supplies of nickel. And particularly the premium brands are not interested in nickel from Indonesia. They don't want their customers to boycott them because they're sourcing their materials from sort of, unclean sources. And so as you can see here on that theme, making sulfide concentrate is generally less carbon intense anyways than these other laterites, the nickel pig iron and the ferronickel. We are at about 1.8 tons per ton, but we also, our tailings will sequester CO2. This is quite interesting. Any silicate mineral that you expose to the atmosphere will eventually and slowly absorb CO2 from the atmosphere, and the silicate mineral converts to a carbonate mineral. And the CO2 is gone basically forever. So this happens slowly. But if you grind your silicates up, and this is basically a big silicate deposit with some sulfides in it, so we grind it up, we float off the sulfides because that contains the valuable nickel and cobalt and a bit of platinum and palladium as well. And then the silicate tailings are at 80 to 100 microns. And so they've got a lot of surface area exposed. The tailings will absorb the CO2 from the atmosphere rapidly. And we're working with someone, Dr. Greg Dipple at the University of BC, who has been studying this for 20 years. He's developed methodology to measure the CO2 uptake, and we're working with him. We'd like to see that methodology certified so you can then claim the carbon credits. Anyways, we think we do have a path to carbon neutrality, which would be quite remarkable. So here's the catalyst. I haven't put any dates on them because, as they say, it depends. It depends mostly, launching the environmental assessment and feasibility study depends on raising our next round of capital, which we are working on with a great deal of focus right now. We're not planning to sell stock. We're planning to follow the same model we follow with Mitsubishi, where we will sell a portion of the project itself for the money to develop the project. And it's just, the reason is the math is just better for the shareholders. A couple of directors I'd like to talk about. Martin Vidra, our president. He had a 31-year career at Sherritt. He could have gone anywhere, and he chose this project to get involved with. So he's an engineer. He used to run Sherritt's mine in Cuba, the refinery in Alberta, in Fort Saskatchewan, Alberta. But he is also, part of his career, the latter part of his career, was marketing nickel and cobalt products to end users. So Martin is the one that is running he's leading our engagement with possible strategic partners and leading most of those discussions. So with mining companies, battery companies, and automobile manufacturers. I also want to point out Robert Morris, the director. He, until 2 weeks before he joined our board, he retired from Vale, which is the giant Brazilian iron ore miner that also has a ton of base metals production. Bob was in charge of worldwide sales of base metals for Vale. That was, copper, nickel, cobalt, and precious metals. It was a $5 to $8 billion a year portfolio, depending on commodity prices. So Bob, like Martin, knows everybody, and he knows who's who, in the end user markets. So he's not leading the charge for us, but he's very much playing a supporting role. And here is our capital structure. So I guess we'll open it up for any questions. Okay, I can see a question. Can we access funding from the BC government, proposed funding for 14 mining companies in BC to further your project? Yes, we're working on that. There's also federal money that we're working on. We're also working on money from the US, from the Department of Defense. It's a work in progress, but we're aware of the funding sources and we are addressing them. Another question, can you describe where the interest in becoming a strategic partner is coming from? Car manufacturers or battery manufacturers? That's a very good question. And I would have said until recently that it was primarily from car companies, because the car companies, at least a couple of them that we're talking to, are very aggressive. They really want to invest upstream. They really want to secure long-term supplies of nickel. And they're coming around to the view that they need to be investors in the mine, not just looking for offtake, but looking to become a working partner, working interest partner. And I would have said until very recently that the battery makers, we've talked to lots of battery makers, most of them, I think, I would have said that they're too conservative to actually invest upstream like this. But recently, Samsung SDI invested in Canada Nickel. They invested in the company, which has the Crawford deposit, which is sort of similar to what we've got. And that surprised me, frankly. I really didn't think any of the battery makers were that aggressive, but maybe I'm wrong. Maybe the battery makers are realizing what the car makers are realizing, that if they don't get in the game 10 years from now, they might be out of the game. Well, that's an interesting one. Mitsubishi is a fantastic strategic partner. What role will Mitsubishi play in raising awareness of Turnagain amongst car makers in Japan? You pointing out that the Japanese car makers have been slow to move into EVs. And that's sort of true, although you have to say that Toyota led the charge in hybrids. And, hybrids use a lot of nickel in their batteries as well. At some point, I don't know if Mitsubishi, the car company, even knows that we exist. They might. But at some point, I think, basically, Mitsubishi's job, the trading arm that we're dealing with, is to make a profit. And so they're going to take our nickel once we're in production, and they're going to take their share of it, and they're going to sell it to the highest bidder. If that highest bidder happens to be Mitsubishi Motors, fine. But they're not really. It's not really their job to sort of spread the word about you should be converting to EVs. I think the car companies will figure that out for themselves. What regions of the world have expressed interest in Turnagain? Asia, Canada, the US, and Europe. So I think we kind of got it covered. So what can you share about Giga's active conversations with strategic investors? Well, they're ongoing and they're very interested. And it's always hard to predict timing, but we are having some discussions with people that are very, very interested in doing a deal. So, and what's going to happen? Will there be any signs that we're about to do a deal? That's another question. Hopefully not. Hopefully we can keep a tight ship here and not have any leaks. So what'll happen is it'll just be another day, and suddenly the stock will be halted, and there'll be this huge announcement. That's how it's going to play out. How does Giga's Turnagain project impact the environment compared to other projects? Well, it's actually pretty good. It's, again, it's a limited surface footprint for a lot of rock. And then the silicate tailings are absorbing CO2 from the atmosphere. Our tailings management facility is expensive. It has been over-engineered with a complete emphasis on safety. And I think that's what we need to do. So I think that's all the questions that I see for now, unless there's anything new. Oh, here's a new question. What has been the impact of Indonesian supply on the market and the 3 to 5 year impact? Well, the impact of Indonesian supply, and this is interesting, so for nickel pig iron, it kind of destroyed the market for nickel for the stainless business. But that doesn't say much about class 1 nickel in the battery business. Now they've started building HPAL projects there, and they've overbuilt. The weird thing about Indonesia and these HPAL projects is they're not very economic. Even the good ones aren't very economic, but they just build them and they just keep plowing ahead. So the impact has been mostly felt this year, and there could be another, I don't know, 6 months, 10 months, I don't know, of oversupply of nickel. But the use of nickel grows at a compound annual growth rate of 7.4%. That is phenomenal. That means every 10 years, you double your demand. And, so if we are temporarily oversupplied, and we are oversupplied today, that won't last long as that demand just keeps chewing through it. And I think that's it for questions. I just want to thank you very much for showing up. Thank you for your interest. And if you have any questions or if you want any follow-up, you can contact us and we'd be happy to schedule a meeting. Thanks very much.